Yo, my people, I welcome all of you once again to my channel. If this is your first time watching my video, consider subscribing, because on this channel I always deliver my best. Yes, in this video I'm going to talk about very important aspect of forex trading, which has to do with demand and supply. In other words, premium and discount levels. Yes, in forex markets, what causes price to reverse up or down is the result of unfilled orders or imbalances in the market being caused by institutions. So anytime you see price moving up and down, it means price is going to fill unfilled orders or imbalances in the market, because all the time there are gaps or imbalances in the market being created by institutions. Now, when we say demand zones, what do we mean? Demand zones are always created when there is more buy orders at a given price. In other words, demand is simply unfilled buy orders, and supply is also mean unfilled sell orders. Once again, there are two types of demand and supply. We have one type of demand and supply is natural demand and supply, and the second one is implied demand and supply. Yeah, so when we talk about natural demand and supply, we are talking about the levels that are generated as a result of previous price action. Yes, that has to do with yearly highs and lows, quarterly highs and lows, monthly highs and lows, weekly highs and lows, daily highs and lows, and sessions highs and lows. Yeah, so in this video I will only talk about demand. When we talk about demand, it has so many names. You know, in forex trading, when beginners start learning forex, the only concepts that they are being introduced to are support and resistance. But you know, as you advance, there are more advanced or more technical terms that you will be exposed to. Yeah, so anytime you hear demand, it also means support levels, discount price, wholesale price, cheap price, oversold. Yeah, because at this level, price is considered to be hot, or the exchange rates are very low or cheap. That's why institutions always buy at support levels, demand levels, wholesale price, cheap price, discount price, and then sell when the exchange rate is very expensive. Yes, so on this note, I'm going to take you to the charts and show you these zones. And before I take you to the charts, bear in mind that these zones are being created by yearly lows, quarterly lows, monthly lows, weekly lows, daily lows, and session lows. Now, I'm going to take you to the charts for you to identify these levels. Then, so right now, as you can see on the screen, this is one typical example of demand level. You have major demand level and minor demand level. So this is another demand level. But before we continue, I want to show you something. As I said, demands are always created by monthly lows, weekly lows, daily lows. So before you can get those lows, you have to switch to the time frame. So if you want to know the monthly demand levels, you click on the monthly time frame. So meaning we are in the monthly markets, pound, US dollar markets. This very level was our major demand zone or wholesale price or discount price level, because it is at the discount level. So at your far right where exchange rates column is, you could realize at the major demand level, price is very low, 1.20997. As compared to the top, you could see we have 2.1111770. So at the discount level or demand level, price is very cheap. Let's scale into the weekly time frame where we have our weekly demand levels. So where my line is right now is my demand level. Observing it carefully, you could realize on this demand level, price rejected multiple times. At my left side, price rejected almost 3 times. The third rejection didn't touch the line exactly, and then in future, price came for another retest. And then the last one, this one, because of the coronavirus, price traded beyond it, and then now after that, price came back but didn't touch the zone exactly, and now price is at the premium level. But in future, definitely it will come back to the major demand zone because price always oscillates in the markets. So after taking care of the liquidity at the premium level, it will surely come down to the demand levels. Great. Scaling it to the daily time frame, we again have demand zones. Taking into consideration this level is our major demand level. Price rejected twice at this level. In future, because of the coronavirus that took place in 2020, price traded beyond the demand zone. In future, it retested it, then went bullish. So it's like that. It happens all the time. Look at this typical case study here. It's a classic one out there. At my extreme left side, you see price rejected twice in 5th June 2017, and then came back for another retest at my extreme right in 7th August 2018. That is approximately 1 year time. Price retested the same zone. That's how it is. Another typical case study happened here. We had major demand level here, so it happens all the time. Currently, this is our daily lows or daily demand levels. Switching it to 4-hour time frame, the same thing happens. We have multiple rejections at the discounts level here. This is where liquidities were located. Just after that, price went bullish with strong momentum. Yeah, so it happens all the time. 1-hour time frame. On 1-hour time frame and 15-minute time frames are considered to be daily demand levels. Yes, look at this classic one out there. This is our major discount level. Another discount level was created here. We have another one too here. So it happens all the time. So at these zones that we have liquidities where orders, money, cash are located. Here's another typical example. You could realize as soon as price traded to the discount zone and tapped some liquidity, then price went bullish. Yes, banks or institutions always place their buys at discount levels. That is where buy pressure is very high. Yeah, so scaling down to 50 minutes, this is an ideal market for daily cycle traders because on 15-minute time frame, this is where we see stations, highs and lows. Yes, so again, we have various discount levels. Once again, on this 15-minute time frame, typical case study is here. This one, though the lows were not of the same level, but this is a typical example of demand level. Yeah, so on this note, I would like to sign out here. See you in my next video. I love you all. Bye bye.